In this video, we will see the current affairs for the month of April 2019 from the topic Economic and Industrial Development. The first topic is the foreign investment in municipal bonds. So here we have different terms like foreign investment, municipal bonds, etc. So we can see one by one. What was the news? The news was that RBI eased loans so that RBI eased norms so that foreign portfolio investors can invest in municipal bonds. Eased norm means now it is easier for foreign portfolio investors to invest in municipal bonds in India. So we have to see what is this municipal bond. Municipal bond is the bond issued by urban local bodies. Urban local bodies, we have different tiers of governments in India: local government, state governments and central government. So 3 tier is there. In that tier, an urban area is governed by urban local body. So we have corporations, municipalities, etc. So there are 2 types of local bodies mainly. There are different other bodies also, but mainly municipalities and municipal corporations. So these urban bodies and the entities owned by them can issue the bonds. Bonds is nothing but a debt instrument. It is debt. What is debt instruments? It is the way for getting money by these bodies from the public. It means that they will borrow money from the public. So what is the guarantee they are giving? They will issue a bond, that is municipal bond. So this bond has certain prescribed terms and conditions. For the money they are giving to the municipality, they will get the principal amount back with some interest. So what is the interest rate? What is the tenure? For how many years? And what will be the amount they will be receiving back, etc. will be specified in this bond. And after the maturity period, the people who are investing can get back their amount with interest as per the conditions by submitting the bonds. So that is that is how these bodies are getting funding. So this is one way of getting capital funding. So this money where they are getting will be used for capital investment, capital expenditure. What is that? It will be mainly for infrastructure projects. Then only they can generate revenue and pay back the debt, right? So for any activity, any infrastructure, any revenue generating projects, we need money. So the municipal bodies cannot rely on central government or state government always for their revenue, right? Usually the drawback in our municipal government, that is urban local body government, is there. They are cash trapped. They don't have enough revenue. They don't have enough revenue like state government or central government to raise their own resources and run their own projects. So there is one drawback. It is in a poor cash condition is very poor in urban local bodies. So this kind of bond market, that is capital market, is governed in India by SEBI, Securities Exchange Board of India. So the SEBI has come up with a certain guidelines so that the municipal bodies can issue bonds to ensure the payback, to ensure that these municipal bodies are generating enough revenue to give back the money. So there are systems that have come up with the ratings also. Municipal bonds are also rated so that the people who are investing can see the rating and can choose their investment. So the best performing municipal bodies will get more investment and they can make it as a higher price. Higher price means the interest rate and the principal amount they can give back can be reduced. If they are having good ratings, more people will be investing, so they will be gaining. So for encouraging municipal bodies to be more efficient, government has come up with rating systems also. Like credit rating systems are there for companies, credit rating systems are there for countries. Like that, credit rating system has come for municipalities also. This part is clear, right? So for by issuing bonds, the municipal bodies will get fund for their projects, especially infrastructure projects. And now what is the effect of this? If foreign portfolio investors are allowed to invest in municipal bonds, it means the municipalities will get more access to the credit market, right? More people will expand this reach to the non-resident Indians also. Non-resident Indians, foreigners, etc. Non-resident Indians and foreigners can invest. So it is expanding the market. More access to capital market. And in the other way around, this non-resident Indians will also get more access to the domestic market. If they want to invest in India, they will get more access to the domestic market. And generally, these municipal bonds don't have much value in the public because they are already cash strapped. So how they will be returning the bonds? So there is a risk factor associated with the municipal bonds, so that many domestic investors are not interested in investing in municipal bonds. So now when foreign investors are investing in municipal bond, they will create a demand in the market. So the domestic investors also feel like this is a trustworthy investment they can make. So it will create more interest for the domestic players also. And now the terms and conditions. RBI has allowed FPI with certain terms and conditions. What is the condition? That the conditions will be limit how much they can invest in the municipal bond. It is according to the overall debt situation of the municipality and overall investment that FPI is making in such debt instruments, etc. There are some conditions. So these conditions are now similar to the state development loans. So municipal bonds and state development loans, SPA conditions are same. The state developments are nothing but the securities issued by the state government. The securities will also work in the same way. The government will be issuing securities, public can buy it, so the government will get money, and after some time government will pay back the securities according to the term. So when the central government is issuing such securities, it is called as government securities. When state government is doing it, it is called state development loans. So this is also a form of financing by the state governments, and these terms and conditions are also almost similar like the government security. In these cases, the securities are used, and the state development loans also can be used by the banks for these purposes. So they can banks can show this as an investment that a bank is making. So this also works in the same way. So you can remember these terms when you are reading some news, and we have already discussed these things in our previous classes. So you just remember the link between these things. Now we can see about the FPI. FPI is foreign portfolio investment. So we have to see the difference between FPI and FDI. FDI will be usually coming in news. So that is important to our economy. You have heard about balance of payments. So regarding international trade, if you are having more imports than exports, our balance of payment situation will be in a negative conditions. So we have to find some way to balance it. In Indian situation, this is balanced by the foreign investments. So more foreign investments are coming to the country means we can balance our inflow and outflow of the cash from the country. So this foreign direct investment will come to picture like that. Also many sectors now in India are being open to foreign direct investment. So in this way also foreign FDI will come in use often. Now what is here in the news is FPI. So there is a difference between FDI and FPI, even though both are coming from the foreign sources. So foreign direct investment, direct means they will be directly investing in an entity. There can be a company in India or it can be a foreign company operating in India. So when the foreign investors are investing in the company directly, it is a foreign direct investment. That is equivalent to buying equities or shares of that company. They will get direct control of their company. So as in the company operates in such a way that the people who are holding more shares will be having more voice in their governance, company governance, right? So similarly, the foreign direct investors will also get company management rights according to their investment. So they get involved in the company operation depending on their investment. And it is like a long-term investment. When somebody is investing in a company, it is not simply expecting the profit in buying and selling the shares, right? They want to invest and they want to get the dividend out of the company. So it is a long-term investment that a person is making. So it will stay in the country for a long time, generate employment in the country, generate income in the country. That's why FDIs are encouraged, because for poor countries like India, when other investors are investing, it will help to create more employment in the country. And regarding FPI, it is like an investment where the investors will be holding a portfolio. Portfolio meaning that there will be a case and there will be many entities in it. So the investor is not particularly interested in a particular entity. So he will be investing in different things. He will be investing in a municipal bond, then he will be investing in an equity in another company, then he will be buying shares in another company. So there are different debt and equity instruments this investor can invest. So the portfolio management will be taken care by a different entity. They will manage the portfolio of the investor. So the investor, there will be a part in between. So the investor will be not dealing directly with the entities in India and entities in another country. This portfolio manager will manage their investment portfolios, and what are the returns they are getting out of the investment they will get. So they are not directly dealing with the investment in the entity that they are going to make. That is the difference. There is no direct involvement. So it means that they don't have much interest in the management of the companies or entities that they are investing. So it means that there is no commitment from their part. There is no commitment. So whenever they want to take back the investment, they are free to take back. So it is more volatile. So when we see that the rates in other countries like USA is increasing, the investors who is investing in India will suddenly pull back the money and they will invest in US market. So this kind of volatility is always there in FPI. That's why FDI is more preferred than FPI by countries. Now let us see how this topic is important for ESE exam. In ESE 2019, there was a question: which of the following is a viable alternative to term loans and are instruments for raising debt financed by large publicly traded firms to obtain funds? So this is a question from capital market. Unless you know how the capital market, what are the different instruments available there, it is difficult to answer this question. So we here have discussed about bonds, that is a debt instruments. Here shares are not debt instruments, it is part of the share in the company. Asset loans, it is asking about viable alternative to term loans. So asset loans, if we have asset, we can keep asset as collateral and get loans. So it is not an option. Gold loans are same, we have to keep gold gold as collateral. If you don't have any collateral to give, how we will raise money from the market? It is through different instruments like bonds. So these are called debentures, debt instruments. So the answer is B. So what could be the possible question? So there can be question about the security market and portfolio investment or even municipal bond from this topic. Let us see one question. Which of the following are correct about foreign portfolio investment? The investor invests in a group of financial assets such as stocks, bonds. Second, the investor gets direct control over the entities in which he or she is investing. Third, investor can pull back the investment at any time. So we have discussed the features of the FPI. So he will be investing in a group of financial assets. First statement is correct. Second, he will not get a direct control. So direct control, we saw that it is FDI, not FPI. So second statement is wrong. Third statement, investor can pull back the investment anytime. He is not bound to keep the investment for a long time. So third is correct. Answer is C, 1 and 3. Next topic, automation and job market. So this is about how automation is affecting the job market, that is employment and employability. So we will see in detail. It was based on International Labour Organization, ILO. They have come up with a report named Changing Business and Opportunities for Employer and Business Organization. So they have identified that worldwide how the business is working is changing drastically because of the technological innovation. This report has identified that worldwide there is a change in the nature of the business. So we are also aware. We are also aware of the technological changes, how we are traveling, how we are booking rooms, how we are ordering foods, how we are purchasing. So the retail business, platforms, everything have changed the ways in which the customer is behaving, and also the business organization itself is performing its duties, how it is performing, the organization, the way of business. So everything has changed because of the technological innovations. So added to that, there is global integration. So economies are more connected now. Also there are shifts in the demography. Many countries are becoming old. So their demands, the way of working is different from younger countries. So we are experiencing a generational shift and demographic shift worldwide. And then there is impact of climate change, environment. So environment, sustainability and fighting the climate change, etc. is getting more important. So we have to be more environmentally conscious in doing business. So environment matters. And next common factor is the shortage in the skilled labor. So worldwide there is a shortage in skilled labor because the demand of the industries just 2, 3, 4, 5 years before is not same as the demand of industries now. So there is a sudden shift in the skill requirements. So the employers are not able to find enough skilled people for employing. So that is also a worldwide phenomenon. They have identified these 5 common trends globally. So these trends are there in the countries like India also. So this is the common features. So now how the business is behaving in this changed environment is the report. We have seen the term employability. So it is different from employment. Employment is the situation of the person, status of the person, whether he is employed or not. But employability is whether the person has required skill sets that is required by the employer. So employer will be seeking certain skills for the people who has to be posted in that job. So if the applicant is not having that skill set, they cannot employ them. Right. So the skilled labor, required skill with this required skill set, that is an important condition in employability. So in Indian situation, we are having both these problems. India is facing unemployment problem. Many people in India are not employed. So we have workforce available, but we are having employability crisis also. the people who are available is not skilled enough to be employed. So it is a difficult situation. We need employment, but we don't have that skill set. That is because the skill set required by the people are changing drastically. So almost 60% of the skill set is not matching from the previous 2-3 years to now. So why this is happening? Because our education systems takes time to respond. It takes time to respond to the changes. It is not dynamically linked with the market situations and industrial requirement. We are following the system. So if we want to change the system and incorporate the new skills, it will take time. So the education system is not capable to adjust fast to the requirements. That is the main reason why this employability crisis is coming in India. And this employment and employability is also affected by automation. So this report tells how automation is affecting the job market also. So automation means many jobs that is done by humans before can now done by the computer systems. So mainly robotic automation. Robotic automation means certain repeated jobs that is usually in the manufacturing process will be handled by the robots or robotic arms or robotic systems. So the studies shows that almost 51.8% of jobs in India can be automated. So that means these are like kind of structured jobs. Structured job means the person who are doing the job need not apply his or her mind. They have to just follow the instructions or certain patterns of job. They have to just stand there, do the same job repeatedly. That is what the jobs that can be easily automated using robotic systems. So there are 51.8% of the jobs in India are such jobs that can be automated. Globally it is 40%. So it means that more than half of the jobs in India are at the threat of automation if you are going for full automation. So these are mainly manufacturing, retail, data collection and data processing jobs that are under threat, which can be easily automated. So retail, we are seeing the retail companies like Amazon are using drones and automated systems for storage and even delivery also. So we have seen advancement in ICT regarding MI, AI, etc. So where this impact is coming? So this impact will come here in this sector mainly. So mainly the informal sector in India will be affected, that also mainly women laborers. So the majority of women workers in India are employed in such industries, small manufacturing industries, retail industries, textile industries, etc. So they will be more affected than men workforce in India. What could be the possible question from this topic? We can see an assertion reasoning question. Statement 1. India is facing an employability crisis. Statement 2. Many firms are unable to find candidates with the right skills who can be employed. So this explains what is employability crisis, because there are people to be employed but they don't have right skill set. That is what it means. So the statement 2 is the explanation of statement 1, right? It is explaining what is employability crisis. Unable to find candidates with the right skills. So the answer is A. Next topic is project Sashakt. So this is in relation with NPA, non-performing assets. Non-performing assets, you will be familiar in news. It will come often in news because banks are now suffering with the NPA problem, because the credits or loans they are giving has not come back. Many defaulters are there. They have failed to pay back to the banks. Now, if they are failing to pay back to the banks, how the bank will work? They will be in a crisis. They can't lend more. So, if they can't lend more, their profitability is affected. Their existence itself is affected. So, many banks crisis we have seen, and the government has put forward many steps, including consolidation, recapitalization, etc., to deal with the NPA problem. So, this NPA problem will come in news once in a while. So in different ways, and how the government is trying to counter the problem is also important. So this is also related with dealing with the NPA problem in banks. So NPA or non-performing assets are those assets whose interest or the principal payment is pending for more than 90 days. So it depends on the type of loans. For agricultural loans, the condition is different. For normally, if it is pending for greater than 90 days, it is classified as MBA. So according to the level of the risk, there are different classifications in MBAs. But the definition is like, if it is pending for more than 90 days, it is an MBA. So what is this Project Sashakt? So Project Sashakt is a method suggested by Sunil Mehta panel. So it has come up with certain recommendations to solve this MBA issue. So this panel has suggested some approaches to deal with the MBA problem. One of the approach is bank-led resolution approach. Bank-led resolution approach. So it is about giving more autonomy to the bank to deal with the bad assets. So it is suggested that if the bad asset is below 50 crore, the asset is, the bad loan is below 50 crore, it can be dealt at the bank level. So bank can take measures how to recover the loans or the way to go with it. And if it is between 50 to 500 crore, there will be an inter-creditor agreement. Inter-creditor agreement. So for this large amount, there is possibility that same person would have taken loan from different banks. So there should be an agreement between all the lenders who have given to that particular person. They should come up with an agreement. They should proceed together. So that will make the things easier. Because when the asset price is very large, it is difficult for a single bank to recover that amount of money because of the large size of the investment that is involved. So for enabling to deal with such bad assets, there is an agreement between all the lenders and they will appoint a lead bank among themselves, and this lead bank will take care of recovery process. And if they are not able to recover the asset within 180 days, then this case will be transferred to National Company Law Tribunal. So this National Company Law Tribunal was established under the Companies Act. So the Companies Act deal with how a company is performing, who can buy the shares, how the shares to be given, how the general body meetings has to be done, what are the roles of the directors, like that. Company operations are dealt in the Companies Act. So if a company is not able to pay back the money, they will come under the civil dispute. That will come under a dispute between the company and the lender. So the lender can take the company to the tribunal to get back their money. So they will come up with an agreement, either the selling or giving shares, or different procedures are there to get back money. But this dispute will be taken before the tribunal, and the tribunal will try to solve the issue between the lender and the lendee. So like that they can resolve the NBA issue. And if it is more than 500 crore, it will be beyond the control of the inter-creditor agreement also. Then they will go to a separate entity, that is asset management company. So this company will be specialized for dealing with such assets. They have to get the assets from the defaulters, then they have to auction it or sell it or reinvest it, whatever the way it is possible to generate income from it. Then they will be paying to the bank. So it is out of the operations of the bank. It is not under the set of operations. That is not under the specialization that banks are dealing with. It is a completely different matter, managing a company and managing the assets. So it is better given to another entity. Sometimes we will call it like a bad bank, bad loan bank. So such company incorporated separately can deal with such assets. So what they will do? They will buy this stressed asset from the bank. So if it is a 500 crore loan, they will buy this loan from the bank. So the bank will go off from the balance sheet of the bank. Loan will So the loan will go off from the balance sheet of the bank. So that loan is no longer a non-performing asset for the bank. They will get back the money. So then this company is under debt, right? They have to recover the money they have invested. So here is their investment. They have invested that much money in the bank to get the asset, and they have the asset, and so they will try different ways to get back the asset. So for investing purpose, where they will get money? So these people should be having money, right? How they will get money? They will use alternate investment funds. So there are different ways of investing in an economy. So these alternate investment funds are specialized funds that a group of investors will be coming together. They will put the money for a special purpose. They will be putting together, and they will share the profit they are getting. So the people who are interesting, who are willing to take the risk in investing such companies, they will come together and pull the investment. So it is called alternate investment fund, and using this fund, the asset management company will buy the bad loan and see how to deal with the defaulter to get back the money. So once the company gets the alternate investment fund, the management of that bad asset goes to the investors. So these investors will be taking care of how the asset has to be managed. So this is the way suggested by the panel under the name Project Sashakt. So what was the news? It was in news that now banks can go with this method for recovering their bad loans. So earlier there was an RBI circular telling that the banks have to go with insolvency and bankruptcy code of India to deal with the bad assets. So if they are not able to deal with the NPAs in the time frame of 180 days, bank has to give it to this code. They have to deal according with the code. So this code is special code which consolidate all the codes that is dealing with bankruptcy and insolvency. That is, when a person or an entity is unable to pay back the money they have taken, they will go into bankruptcy. So when they are declared as bankrupt or insolvent, then the procedures will be taken care by this. So this panel has suggested that outside this code also there is possibility of recovering NPAs. So now the recent circular by RBI enables banks to go with this method, Project Sashakt method. So it is they have made ICA mandatory. So the recent circular by RBI, ICA is mandatory. Intercreditor agreement is mandatory. That is, it will go with the bank-led resolution approach instead of going directly to the IBC. So it is an acknowledgement by the RBI that these issues can be solved outside the IBC code also. What is the relevance of this topic in ESE exam? In ESE 2017, we had a direct question from NPA. Non-performing assets, NPAs, decline in value 1. Demand revives in economy. Second, capital utilization increases. Third, capital utilization, though substantial, is at suboptimal. Fourth, capital utilization decrease consequent upon merger of units. So the answer is C. So when demand revives in economy, the stressed assets under the companies can be better utilized. They will be having more market and they will run in profit, and then they can pay back the loans. When the entities are not performing well, they are not able to pay back the money. That is one of the main reasons behind increasing NPAs, because the companies are not performing well. So the economy is good, companies will perform well and they can pay back the money. When the companies are using their capital utilization, their resources more efficiently, they will get more profitability and they can pay back the money. Even though it is suboptimal, substantial utilization of capital also will help. But capital utilization does not decrease upon merger of units. Merger of units are proposed as a method to solve the NPA issue, because on merger there will be better management of the resources and utilization will be more. So the answer is C. Let us discuss possible questions from this topic. How Project Sashakt will help in resolution of non-performing assets? First, helps in consolidating stressed assets of banks for easier resolution. Second, allows bank to deal with smaller NPAs at the bank level itself. Third, it creates a separate entity to deal with the bank loans. So first and second, we saw that if the agreement is done between different lenders, it helps in consolidating the assets under the different banks into a single agreement, and a lead bank will be allotted to deal with the assets. So it helps in consolidating the stressed assets of different banks for easy resolution. That is true. Allow banks to deal with smaller NPAs at the bank level itself. If it is below 50 crore, banks can deal within their capacity to get back the money. It creates a separate entity to deal with the bad loans. So this is not dealt in this Project Sashakt. Project Sashakt will be using a separate entity to deal with the bad loans that is already in existence, like asset management companies. So the asset management companies are all not proposed in this method. It is dealt in different laws, and government has come up with the different methods to deal with the stressed assets. So this separate entity is created there, not here. So the answer is B. Here I am discussing a new term, that is gig economy. That is the trend in the economy now. We can call it like a gig economy. So what are the features of this economy? It is featured by temporary workers, independent workers who are working for a short-term contract with the companies. So we have seen platforms like Uber, Ola or Swiggy, Zomato, etc. We have delivery executives and drivers. They don't have any long-term relations with the company. They will do their specific tasks and get the payment. So such kind of workers, such kind of working environment, the way which economy is moving now is called as gig economy. That are the features. It is characterized by three things. That is independent workers. So they are not thinking of long-term employment with the company. So they are not bothering about staying at a place, working depending on the working hours they will get salary. It is nothing like that. They will be given a specific task. It is task based. So called gig. So according to the task they will get paid. So there is no other connection with them and the company. So they are also independent to move from one company to another company. It is like it is not like they are tied up to the company. They are independent workers performing certain task. So it is directly contrasting to the normal traditional norm of employment, right? Traditional employment means they should be having a secure job. They will be paid according to the hourly basis or monthly basis they are working. So mainly the people aim for the permanent post. They will have an eye in career growth, promotions, different posts, etc. So there is nothing like that here. So that is the characteristic of workers in this economy. And second characteristic is about the customer. Customer also needs a specific service. They want that item to be delivered to their home. That's it. They want to travel from one place to another. So there are specific demands from the customer. They have to satisfy that need. They are also not having a relation between the company or their normal customer company relations also not there. And third is the company, which is connecting these two people. So the independent workers are there, the customers with the specific needs are there. So the companies will provide a platform, mainly the technology platform, apps, or rather technology platform like a marketplace, where these two people can connect directly. So the connection is between the customers and the workers, but the company's role is only to provide a platform to connect. So for that platform to connect, they will earn some profit and the companies will run. So they are also not interested in retaining the employees or having a direct relation with the customer. So this is the trend in which the economy is going nowadays. So this is not only in India, worldwide this phenomena is happening. So here we have to be aware of the fact that what is this gig economy and all. It may be useful in an interview, but they not this topic may not have much importance in the prelims exam because it covers rather an interview question. Are you aware of this situation? So studies show that almost 56% of the new employment created in India is under this economy. 56% of the new employments. So we will get an idea now how the employments are going now. So why this is happening? Because we have more migration towards the cities. So last 6 months saw very huge increase in migration to the urban areas in cities like Mumbai, Delhi, Bangalore, Hyderabad, etc. So added with the migration, availability of technology and nature of the people, the concept of the people towards work also changing, and technology enables that they need not to be at one place to do work. They can take up many works in many companies and many places and do the work. So these all the factors are encouraging this gig economy. So the studies show that now Delhi has become the capital of migrant workers. For gig, that is the migrant workers will be mainly employed in this economy, and so Delhi has become the capital of this economy, and earlier it was Bangalore, now it has shifted to Delhi because more migration has happened to Delhi. And this economy is not without challenges. What is the main challenge? Main challenge is the working condition of the people who are here. They are like in ad hoc basis. They don't have any security. They don't have anything like minimum payment, regulation of working hours, any skill training, or they don't have any social security measures. Social securities include pension, provident fund, etc. So the normal companies will invest in their employees. They will invest in the provident fund and pension fund of the employees for their long-term benefit. But these companies are not bound to do these things because they are going mainly in unregulated sector. So this all will come under the unregulated employment. So they are not covered under any labor laws, so they don't have any security. They are not assured of minimum requirements that the labor law mandates in a normal establishment. And this skill training also, they are not able to get skill trained by the employees, because for these works the training which is required is available everywhere. The employees can themselves get trained in certain computer basis or something and get into employment. So mostly the employees will get trained outside and then they will go to the job. So this kind of challenges are there. If we are taking care of these challenges, we can also go with the global trend. Otherwise it has adverse effect to the people who are working there.